All right, so short and trailing on a pretty clean looking sort of turn here. Traditionally, I'd be looking, let's say, that bar right there, and then we got another jog, and then we got a code to short on that bar that says I think the pullback long is failing. That's what that code says. And then the way the entry is set up now, we wait for the down bar within the next couple of bars, and so then once this bar closes down, we place the order at one tick back. 80 tick target, which is just mechanically set. That's going to have to break the lows to get there. It's in front of the previous high of day. That's fine. And now we'll just see what happens here. So anyway, getting back to the discussion we were having, there's a balance between giving the machine learning system enough data that it can identify meaningful patterns, but not so much data that it just becomes random noise. All right, now I've done that. I gave it too much, and you get no answer. All right, and then if you give it not enough, then you're basically matching to patterns that don't really have any relationship to each other. And so what we're doing here is trying to find the data that's important enough, that is indicative of what's going to happen, and then have enough of that we can make a meaningful decision. And so that the work that I did a couple of weeks ago, where I took the different categories of data, so momentum, order flow, price action, wave volume, and then I took each of those pieces out and created models and then tested those models. What they showed was that if I take any one of those categories out, I suddenly don't have a very good model. But you put them all together, and okay, now I've got something that works. All right. And so having done that, I'm now confident that okay, I have the 5 pieces of the puzzle that I need to create a model that I can use, and trade real money with. Okay, and now my task is to start refining those. What can I add something to make it helpful, or can I take something away that I don't need in a particular category that will improve it? One of the things we see is a couple of the areas that we're looking at are, should I give that line to the model the fact that you're at the overnight high? All right, that's a question, and that has to be tested. You can't just theoretically go, oh yeah, that's a good idea, and then do it. And you have to actually give that information to the model, create the model, and then test it. It's not at all clear that it's useful. And the problem is that for every single bar now, you're looking at what is your distance from this level, and then that has an impact on everything, and not just, we tend to think of it as, okay, well, it's important to know when it's here that, yeah, you're at the Globex high. But the fact is that you're giving that information to the machine for every single bar. So every single bar becomes affected by that choice. And if you're going to do that, you naturally then want to just, give it yesterday's high, yesterday's low, the overnight high, the current low, and you can do that, but is it good? Will it help or not? You don't know that. It's not at all clear. As a human, you may go, well, it's obvious that's useful. Okay, you may think that, but when you look into the patterns of the order flow, it may or may not be different, okay, than any other time. And more importantly, if you make it so unique that you can basically never match to a previous time, well, now you don't have a useful model. All right. So there's a balance there that we have to find here. And what I have now with the models I'm running and the replays I've run. And then I think we're going to see now in live trading, now that the market's starting to settle down, is a good baseline to work from to make changes and then assess their value, and then make changes and assess their value. So when I talk about it'll only get better over time, this is what I mean, is that we can given a baseline with a known performance, we can now modify that and refine it over time. Okay, so here we are at the end of the day, and plus 130. It's interesting because we had a less than 40 point overnight range for the second day in a row now, so that suggests that things are calming down a bit. We'll see. I got short here. I think we saw this live, and then the market goes into this ugly sideways chop, and we cleanly stay out of that. That's good. And then I really like this entry here. Okay. The problem is that is a tragic stop out to the tick on the pullback. So the trail, I only make 3 points instead of a full 20 points there. So you know, we've talked about this in the past, where you know you'd like to trail to the zigzag. I don't have a clean way to do that automatically. I'm trying to figure out if there's a way to do it. Because you really need to test that. And what we see here clearly is, you know, we don't want to get taken out here. At the same time, we've got to protect profit. So there's a balance in there somewhere. The thing, what I like about what I'm seeing here, though, just in general, is that where I'm headed is, I want to be able to get in like this here, trail to the zigzags. Okay, no, you might have a problem right there. Trail to the zigzags, but then we want to be adding here or here or here, and whether that add is you know, triggered by another signal to get in, which would be an obvious choice, or just any pullback is something to be evaluated. When I look at this chart, what I see is not a whole lot of signals, and that's very much a function of the fact that I've built the model to deal with much greater volatility, but then there's a day here where it's not that volatile. And so basically the rules that are sort of in play here are this chart is the daily chart, okay, and this subgraph down here is the average daily range for the last, I think it's 10 days. It's the same thing down here, actually. The blue line down here. Whoops. All right, well, let me do it. The blue line down here is the same as this bar graph up here. The difference is the orange bars down at the bottom here is the daily range for that day. And so once we get the average daily range below this red line, then that's my signal that, okay, the markets are no longer in this super volatile phase, and start building models that are more in line with kind of how the system was built to begin with. So we may continue to see that as this transition occurs, assuming it occurs. This might just be a lull, and we're headed back just like we saw. Shoot, let me do it. Just like before, you know, it looked like we were headed down, and then wham, we get more volatility again. So let's get below that, and then I'll start building models that are more in line with normal trading conditions if we get there. In the meantime, on the left here is a user-defined strategy, something I released over the weekend. Makes a couple points here in the ES, and then 1.5 points. This is all SIM on the left in the NASDAQ. The problem here is that I actually forgot to turn on the auto trading. And so for a piece of it here, I wasn't trading. I was getting signals but not trading. This is this is a short here, so that would have been a loss. Is that right? Yeah, we would have got in on that bar short. 399s are all take no action, so you can, the market's going sideways here. Now this is a case where, what I like about what I'm seeing is that these are the correct places to be calling for predictions. This one is okay as if the prediction is short, that's all right. But the point is that I can see, yeah, these are the right places. I want to be getting in here. These are all take no action, and the reason is that I think it's very similar to the model's built for a noisier environment, and so since the market's quieted down now, we're never getting above the noise in the model itself. So every one of these cases is getting us, no target, no target. So don't get in, basically, is what it's saying. All right, so we'll continue to work with that and see how that works out. This is using a model that's built with an actual tick data as opposed to these other models which are built using range bar data. This ES I didn't look at yet. Let's take a quick look here. It's interesting because I would sort of expect this particular user-defined strategy to work better on the ES than the NQ. So let's see here. I had the same problem. I forgot to turn it on till later. Very similar here to what we just looked at. This gives us a short signal here, so it's the prediction's wrong in terms of the direction. What else do we have? This is a lot of activity. This is a 233 tick chart, so I was using 500, which kind of seems like is better for ES. I tried 233 today because yesterday I basically didn't get any trades. Long here. Same problem. We get stopped out to the tick just before the really nice run. So, okay, so we understand what needs to be done there. We have to, the trail method has to change in order to deal with that. And in fact, it's the same story really. You want to be adding. You want to be adding here, basically, right in here somewhere. Once this pullback completes, when would that complete? 1775. It would complete up here. So we'd want to be adding up in here somewhere. Okay. So you take the profit that you've made, that you have in the trade now, use that to fund this risk. Get your stop down here, 1550, and then let it go. And then start trailing. This kind of looks to me like it needs a different zigzag. It really feels like there ought to be a zigzag right there. So I might have this too big for this chart. And then we trail to here. And you'd survive that. Yeah, that's nice. And it keeps going. So ultimately you'd get out, around in here. All right. So we'll continue to look at that. Now that the users, my members, have the ability to build their own strategies and get machine learning predictions from those strategies. It'll be interesting to see what comes back. We'll start sharing that out. All right, so that's it for today. Today is Thursday. Yeah, so tomorrow's Friday, last day of the week. And so we'll see what tomorrow brings.